Yeah, good morning and welcome to this morning meeting. What we had seen yesterday that the continuous run of the US market in last 3-4 days has taken some breather, though it's still positive, but a minor percentage. We had seen the run up because of the lower employment data and good corporate results. So what we had seen in the US that the companies which have reported result in S&P 500, around 85% of the company have reported results, and out of that 80% have reported results ahead of expectations. So again, one more quarter of good performance by the corporate in the US, and as such market is showing positive performance over there. But today morning, Asian markets are mostly soft, mainly on account of what we see that the dollar index is showing reversal, and that is up by almost around 40 basis point today as compared to the yesterday same time. So that is putting some pressure on the emerging market and are seeing some corrections. What we see that Indian market is moving in different directions and more worried about the election outcome, and the investors are becoming more cautious for any negative news. Are seeing some profit booking in the recent past. So quite possible that the scenario can continue even in today's trade as well. Commodities are seeing some softness also because of the dollar moving up. So overall direction seems cautious for today again. I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. We are seeing a double top formation in Nifty's daily chart, which is slightly on the negative side, where Nifty has broken its two moving average in yesterday's trading session, that is 20 and 50-day moving average, but the closing was at the support of 50-day moving average, which was at 22,300 levels. So 22,300 level is the levels we have to watch out for. It will act as a very important support zone. If that is broken, then we can easily expect 22,200 to 22,140 levels on the downside. Whereas if we respect the levels of 22,300, then the resistance is at 22,400, 22,500. Talking about Bank Nifty has shown a similar move like Nifty. Bank Nifty has broken 20-day moving average in yesterday's closing was below that, plus it has broken downward sloping trend line. The immediate support for Bank Nifty lies at 48,050 levels. If that is broken, then Bank Nifty will test its 50-day and 100-day moving average, which lies at around 47,700 and 47,350. The upside resistance for Bank Nifty will be around 48,500 levels. Talking about Fin Nifty, close around 21,500, whereas the downside support 570, close around 21,570, whereas the downside support lies at 21,470, followed by 21,370. Whereas the upside resistance for this index is placed at 21,750 and 21,940. So we have two calls right now. Fin Pipe is looking good at current levels. We have initiated buy call on this at 279 for a target of 300 by keeping a strict stop loss of 270. Again, the another call is Davis Lab. So we have initiated a short call on that. It can be sold at current levels for a target of 3850 here by keeping a strict stop loss of 3960. So that's all from my side. I request Nirav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, so yesterday's move again, if you see, it is closed around that support level of 20 to 400 odd on the futures. So this is a very important level, just close below the same. But if in the morning again you will see, Nifty dipping below the 20 to 400 levels, then further selling can come in, and probably it can slide towards 20 to 100 22,000 odd levels. However, the data overall still suggests there is unlikely to be a big sell off from current levels, with the open interest less and the PCR also near the oversold zones. uh, so during elections the VIX has to rise, and that is what is happening, and that's why you're seeing some downfall in the Nifty. But definitely believe some more, some buying should come in from current levels. Now 20 to 500 becomes a resistance zone, and we might retest this level, probably remain sideways around that 20 to 300, 20 to 500 zones. But at this point, some buying is due. Uh, Now, from the stock specific front, IT sector as a whole did well yesterday, and also FMCG, and we are seeing some defensive buying going on in these two sectors. Also, some buying in pharma, but in the last 2 days, pharma hasn't performed that much. But yeah, so take stock of the same, and buy defensive stocks like HUL, Infosys, TCS. So these stocks will attract more buying going forward. Yeah, so they can give you good returns and also be defensive during the downturn. So that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the results front, Credit Access Grameen result is in line with expectation. Loan book grew by 14% sequentially in a seasonally strong quarter and 27% year on year. So against this growth of 27% on year-on-year basis, the NII, profit before provisioning and profits all broadly grew by 35% year-on-year. So it's a healthy growth rate. However, GNPA has increased slightly from 1% to 1.2%. On the other hand, 0 plus DPD, that is the total stressed pool, declined from 1.8 to 1.7%. So nothing to worry looking at the headline GNPA figure. And we remain positive from long-term point of view. Max Financial Services result is above expectation. Annualized premium equivalent grew by 16%. That's also healthy compared to the industry growth, which was slightly lower. Value of new business growth was at 7%, lower than APE growth, as margins came down to close to 29% against last year's 31%. This decline was mainly led by increasing share of ULIP, which increased from 27% last year to 35% this year. Still, despite the VNB growing by just 7%, it was 12% above estimates, and so result was decent. Private market share for Max expanded by 60 basis points on year-on-year basis and stands at 9.4%. We are positive on Max Financial. PB Fintech result is in line with expectation. This being a seasonally strong quarter, sequential growth was 25% and even year-on-year growth was 25%. Against this, OPEX increased by just 15% on year-on-year basis, which led to improvement in EBITDA margins. And company posted positive reported EBITDA for the first time, mainly because of this operating leverage. So EBITDA margin came at positive 0.5% against last year's negative 8%. Similarly, profit also came at 60 crores against last year's loss of 9 crores. So a turnaround has happened in PB Fintech, and we are positive on the company. Today, one IPO will be opening, Aadhar Housing Finance, and will be closing on 10th of May. We have given subscribe rating. Price band is 300 to 315, and market cap post issue will be around 13,000 crores. Total issue size is 3,000 crores. 2,000 crores is OFS, 1,000 crores is fresh issue. Business is very identical to listed companies like Home First, Aavas, and India Shelter. Basically, low ticket home loans, where the average ticket size for Aadhar is 10 lakhs. And in this segment of less than 15 lakh ticket size, where these kind of small regional players are there, Aadhar is the largest player with AUM of almost 20,000 crores. And around 57% of borrowers are salaried, 43% are self-employed. If we compare it with peers on all parameters, like NIM, cost to income, credit cost, ROA, ROE, the metrics are at par with other listed companies. However, one thing where it is lagging is the loan growth. So what we have observed in this particular low ticket housing finance segment, that once the company crosses the 15,000 crore loan book, the loan growth slows down. We have seen this happening in last 7-8 years across companies such as Grow Finance, Canfin Homes, and even Aavas Financiers more recently. So these companies, before they are at 15,000 crore loan book, they grow at 25-30%, and then when they reach 15-18,000 crore loan book, then the growth rate plummets down to close to 15%. So that similar kind of thing is happening in Aadhar as well. So that's the only minor negative. On valuations, it is coming at 2.6 times against a peer average of 3.4 times. So we think that it will command a discount, but probably the gap can close down, and probably listing can happen close to 3.1, 3.2 times. So listing gains of around 15 to 20% is possible in Aadhar Housing Finance. So one can go ahead and subscribe. Thank you.
Good morning. On the chemical front, yesterday Navin Fluorine had posted the results, and result was above expectations. Revenue basically degrew by 13.6% on a YY basis. The impact was mainly due to pricing pressure of R32 in export market and lower sales in CDMO, which is a high margin segment. In terms of HPP and specialty chemicals, it has seen the improved performance during the quarter. EBITDA margin reported at 18.3% versus expectation of 17.8%. FY24 revenue stood at 2,065 crore, and operating EBITDA stood at rupees 398 crore, which degrew by 28% on a YY basis, and operating margin stood at 19.3% versus 26.5% in FY23. In the con call yesterday, the management highlighted that the AHF, R22 and R32 plants are running at full capacity, and the management is witnessing positive trend in domestic pricing of R32. Also, it is positive on the refrigerant gas business driven by current weather conditions and growth in home appliances industry. Overall, in terms of capex, it is already working on R32 AHF capex, and an agrochemical plant is also to be commissioned by end of Q1. And there is also, it has announced the capex worth rupees 288 crore for CGMP 4 facility, where the phase 1 is also going as per schedule. And it has laid down a strategy for CDMO business, where it is it will secure a right mix of late stage molecules and early stage molecules to create pipeline for future growth, which is going to be favorable for their future business growth. In terms of guidance, the management has provided the guidance of 20% operating margin in the near term, which can be achieved at 25% over the long term. The stock is trading at 33 times of FY26 EPS, and we are neutral in the near term but positive over the long term. SRF Limited posted the results, and results were marginally below expectations. Revenue degrew by 5.5% on a YY basis, and EBITDA margin reported at 19.9% versus the expectation of 21.4%. In terms of segment performance, chemical business reported a decline of 14% in terms of revenue, and operating profit has also declined by 33%. Packaging film business has seen the 3% revenue growth with decline in operating profit by 19%. Technical textile business reported 9% revenue growth with 44% increase in operating profit, and other businesses reported an increase of 13% revenue growth and 37% increase in operating profit. The stock is trading at a PE of 29 times to FY26 EPS, and we will provide the outlook post the con call. In addition to this, Chambal Fertilizers and Chemicals posted the results below expectations. Revenue degrew by 27% on a YY basis. The key reason for the degrowth or the weak performance was mainly the weak performance of bulk fertilizers, that is urea and phosphatic and potassic fertilizers, where it has observed lower volume and lower gas prices. And crop protection chemicals and specialty nutrient segment continue to perform well. EBITDA margin reported at 6.3% versus the expectation of 10.4%. The stock is trading at a PE of 8.5 times to FY26 EPS. Pidilite Industries Limited posted the result below expectations. Revenue grew by 8% on a YY basis. The growth was broad-based across segments, where volume growth stood at 15.2% in Q4. Geographically, urban and rural has seen the growth, where rural markets outpaced the urban growth. And gross margin improved by 50 basis points on a sequential basis and 691 basis points on a YY basis. EBITDA margin reported at 19.9%. Also, during the despite challenges in the international markets, it has seen revenue growth of 7.8% in the overseas subsidiaries, with EBITDA margin at 14.8%, which improved by 400 basis points over FY23. The stock is trading at a PE of 59.5 times to FY26 EPS. Voltas has posted the result, which has seen which was ahead of expectations. Revenue grew by 42% on a YY basis. Cooling product revenue grew by 44%, and EBITDA margin reported at 9.2% versus 8.3% on a QOQ. EBITDA margin reported at 4.5% versus the expectation of 6.4%. The lower EBITDA was on account of continuous losses in international electromechanical project. And the stock is trading at a 61.4 times to FY25 EPS. And for most of these results, the con call is scheduled today. So we will provide the outlook post con call. Thank you.
Good morning, everyone. Yesterday, Sonata software results came in and they were below expectations. Dollar revenue came at $82 million, which was down 2.2% Q on Q on a constant currency basis. Even the margins at 6.6% saw a dip both quarter on quarter and Y on Y basis. The stock is trading at a valuation of 28 times 1 year forward earnings, and near-term outlook remains negative for the stock. Secondly, there is one more IPO is opening for subscription today. The name is TBO Tech Limited. So the company is a leading B2B travel distribution platform and in the global travel and tourism sector. It operates in more than 100 countries. And through its strong platform, it basically simplifies the travel business for suppliers like hotels, airlines, and for the buyers like travel agencies, tour operators, even the online travel companies, and others. So instead of dealing with multiple platforms and systems, buyers and sellers can use the TBO Tech's single platform to conduct the all their transactions. The company even has a direct tie-up with Eurorail and Ministry of Hajj and Umrah, and it has eased the traveling experience for its clients. Post COVID, travel industry is seeing a robust growth, and it is expected to grow at a CAGR of 8.3% in the next couple of years. Here, it is noteworthy to mention that about Saudi Arabia, which is one of the fast-growing tourist destination in the Middle East. So historically, Saudi was accessible mostly to individuals holding business visas, religious pilgrims, and the workers. Now, Saudi is significantly making efforts to reposition itself, and it is competing with other Gulf counterparts like Dubai, Abu Dhabi, and others. And it has initiated a Vision 2030 initiative and is actively working to welcome the global visitors. So even TBO Tech is benefiting from this increased traction in Saudi Arabia. So a listed competitor in India for the company would be Rate Gain Private Limited, but not 100% like to like one. So TBO Tech is offering a huge gamut of travel offerings to its users and can see a robust growth going forward as well. Now, on valuation front, the stock would be available at a P of 51 times. We are giving a subscribe rating to the IPO, citing good growth prospects in future for the stock. The total issue size is 51 crore. The price band is rupees 875 to 920 rupees, and it will close on 10th of May. Thank you.
Yeah, that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, we are witnessing a range-bound movement in gold. Prices are consolidating from 71,500 to 70,900. So, one can trade within this range, selling around 71. 300 is recommended with a strict stop loss of 71,550. And on downside again, prices if test 70,800, one can buy for a pullback, maintaining a stop loss of 70,600. Whereas silver, if prices are sustaining below 83,000, we are expecting profit taking. So sell with a stop loss of 83.50, and on downside, it may test 81,200 to 81,000. In copper, prices have opened gap down. So any pullback around 864 for a trading purpose, one can initiate a sell and maintain a stop loss of 870. On downside, immediate support is 858, 855. So watch out for that. Also, zinc, if prices are sustaining below 260, then we might see some profit taking. Else, buying momentum should continue. And in crude oil, prices are yesterday recovered from the lows support of 6500, and again today we are expecting a gap down opening. So important level to watch out is 6500 to 6450. This is the support area. So if prices are breaching below this and closing, then one should be cautious. Else, if today the prices are closing above the 6500 zone, then we might see a pullback again. And natural gas, one should initiate a buy around 182 and maintain a stop loss of 175. On upside, it can test 190, 193. That's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USD and we are expecting some sideways momentum in a very narrow range. On the higher side, we are expecting 83.60 acting as a very important resistance, and downside 83.45 on the lower end. So either 83.60 levels breaks, one can initiate a long positions for the target of 83.70 to 83.75 levels. And on the lower end, one can initiate a short positions below 83.45 levels for the target of 83.35 and 83.25 levels with a stop loss of 83.60 levels. Thank you.